Welcome to Training for Volunteer Income Tax Assistance, also known as VITA. Section 5, Deductions. This training is presented by the Franchise Tax Board VITA trainer. Hi, I'm Tom. The Franchise Tax Board is proud to offer this training series for upcoming filing season. We have created these training videos with California VITA volunteers in mind. This is the 5th of 13 sessions, and we hope you will find them helpful as you work on your VITA certification. If you have any questions, please contact your local VITA coordinator. You may also reach out to FTB's VITA team at 800-522-5665 or by email at volunteercoordinator@ftb.ca.gov. Deductions. Okay, let's get started. In this session, we will focus on the differences between the standard deduction and itemized deduction. Personal exemption. First, let's take a moment to cover something really important. The personal exemption deduction for taxpayers, spouses, and qualified dependents has been permanently suspended. This means that the deductions taken prior to the tax year 2018 on the federal tax return for each exemption are no longer allowed. As a VITA volunteer, you will get questions from taxpayers about whether to take the standard or itemized deduction on their federal return. TaxSlayer will determine which option is most beneficial to the taxpayer, but will also allow the taxpayer to pick. The standard deduction is a set amount determined by the filing status and may differ from year to year. To locate the standard deduction for the 5 filing statuses, refer to Publication 4012, VITA and TCE Volunteer Resource Guide for federal. For California, refer to FTB 5130 Volunteer Reference Guide. Itemized deductions are completed on Schedule A. This includes qualifying medical expenses and state and local taxes, also known as SALT, which are limited to $40,000. SALT covers income tax paid, general sales tax, real estate, personal property, and vehicle license fees, also known as VLF. You can deduct mortgage interest on the first $750,000 of a mortgage for loans taken out after December 16, 2017. For loans with origination dates prior to December 16th, the cap is set at $1 million. To claim home equity loan interest, the loan must be included in the $750,000 mortgage cap and must be used to buy, build, or substantially improve a qualified residence. Charitable contributions. In most cases, the amount of charitable cash contributions taxpayers can deduct on Schedule A as an itemized deduction is limited to 60% of the taxpayer's adjusted gross income. Gambling losses are permitted only up to the amount of gambling winnings. personal casualty and theft losses only if declared a disaster area by the President. For more information, you can go to FEMA.gov to find out what areas were declared a disaster zone by the President and search for disaster. Please note, these losses may be included in itemized deductions, but is out of scope for VIDA. Refer to publication 4012, VIDA TCE Volunteer Resource Guide for Federal Schedule A itemized deductions. For California, refer to FTB 5130 Volunteer Reference Guide. You have now completed the 5th of 13 VIDA training sessions. All sessions are available on the Franchise Tax Board website at ftb.ca.gov. Again, if you have questions, please contact your local VIDA coordinator. You may also reach out to FTB's VIDA team at 800-522-5665 or by email at volunteercoordinator@ftb.ca.gov. Keep practicing, and thanks for watching.